Just wait. I will introduce, then you start. Within 1 minute.
Okay, sir. Okay, sir.
Principal, sir. So, very good evening to you all. And highly welcome to the World Record Series organized by Shri Kumarswami Mahavidyalaya, Ausa. Today's topic is investment in stock market. And the resource person for today's session is on dais, Honorable Dr. Subhashini Suresh ma'am. So firstly, I welcome to you, madam, for the dais.
Welcome,
I welcome the chief organizer of the series and faculty members of my college and all those dear participants. Now let me focus. I will like to introduce the keynote speaker. Ma'am have completed MBA and at present she is working as a director at Dr. SNS Rajalakshmi College of Arts and Science in Coimbatore, Tamil Nadu. So with this brief introduction, now I request you, madam, please start your presentation on the topic investment in stock market. You are most welcome.
Okay, sir. Thank you. And good evening to everyone. So welcome to the topic, and I thank Shri Kumarswami Mahavidyalaya and the principal Dr. Vidkarkar for giving me a wonderful opportunity for taking me onto this topic and participating in this World Book Series. I wish you all the best for all the series that you're doing it. I've been seeing many programs of you. It is really wonderful. And I think so many groups are getting benefited by this, sir. Extremely thanks to the management for taking this opportunity, sir. So with no time, let me get into the topic. And today we are going to see about the investments in stock market, what it is about. So everybody knows like something is going on in the stock market. Some has invested, some are waiting to invest, some are very, no, I don't want to take any risk. So many things are going it in different minds, right? So let me answer to those questions by going it. So before entering into the topic, I would like to begin with a story. So imagine you're in a place, right? So everyone right now here the marks are shown like everybody are with the laptop, with the mobile, or they are onto the journey like, or with your friends, as it is a New Year period, Christmas and New Year, everything are falling. Most of the peoples are on vacations, they enjoy really well, right? Let us imagine that you're onto the place where no one is there, okay? You're the only person who is surveying in the land. So let us take that you're the only person who is surveying in the land. You don't find anyone nearby you. No phones, no laptops, nothing else. Yeah, you're the only person who is survival in that area. So what will happen to you? Yeah, you don't have any tools or nothing is in your hand. Okay, so the only option is you want to have survival for this. So let us imagine that you're a fisherman. So the only survival option you have is that you can fish a day, right? So what you do is you fish every day, one fish, you take it, and that is the meals, dinner, everything, breakfast, everything for you people, for that pay for the fisherman, and he survives by that. But as the days keeps on moving, what happened? That fisherman, he has to jump into the sea and he finds a lot of trouble. His eyes are getting very irritated. He don't know how to survive. But one day he is not able to do the fishing. He doesn't take any foods and he just sleeps. So this is as the days go by, he realized that he needs to do something, right? In order to take his food on a daily basis, he should not miss his food because the only option is he can take the food, fish in a day. No one is there to help nearby. So he keeps on going and searching for the tools. So one day, he skips fishing and he's go back to the area. He finds so many coconut trees, bunch of trees are there. And he just, with all his strength, he broke the tree and he created like a fishing net. He created with the branches and with the leaves, he created it. And with the nutshells which are finding on the seashores, he did a fish net he created and he started fishing. One in a day, he's able to take 2 fishes. Yeah. So he understood that because with the second fish, he is able to make it on the second day, right? He is able to have his food. So he thinks that he was able to spend his much of his time in fishing, and he's able to create more tools. He is able to fish a lot, and he is able to survive in that field for a very long time, right? For his survival, he thinks like it. So let us go into the another story. Let us relate these two later. There is a two persons are here, one which you see on the picture. One, his name is Ram. Another person's name is Sham. Both are working in an IT company. So when we take Ram, you can see his lifestyle. Oh, what a house, lovely house he has, and a fantastic car. He spends all his income towards his lifestyle, creating his lifestyle, like a high car and Bosch house, everything he creates and he spends for his vacation. He does everything. Yeah. Coming to Sham, he knows it fisherman story. Yeah, because he is able to save something in bed. He will have enough time to think how to generate, how to make this money multiply. He knows about this fisherman story. So what he does with this 1 lakh payment, he started to save 70K with him and he spends 30K. So what he does with it, with the 70K, he thinks that he will invest some money, yeah, in the stock markets or in the diversification. Let us go into the many investments avenues are there. So he started investing 70K over it and he's spending 30K off it. Okay, the days goes by. He's sacrificing his present income. He's not having like Ram. He's not spending much. He's spending a very little one. So the few days later, again these two persons meet again, and Rama saying, "See what a car I have, man. You don't have any car. You are just sitting in a small house and you're not spending much." He keeps on telling, but Sham is not shamed by the action which Ram got. He says, "You just wait, Baba. My time will come. Then I will show like." So what he did with this amount, he started to purchase some hotel. Yeah, he made some profit and he employed few part-time. He was taking care of the hotels after the IT jobs. He employed few peoples and he started earning profit out of it. Slowly the days were going by. As we know, the IT, there are so many peoples are there. So the company told, we need to fire the employees because we are running in in-laws. We need to fire the employees. So what happened? Ram and Sham were again meeting. Whatever he gained, whatever he earned as an income, he spent it for the loan, for the car he was paying it. So he ended up, because he is going to leave the job, he doesn't know what to do with this, how to pay the loan, how to pay for the house loan, how to pay. So his financial conditions was very, very poor. Whereas Sham, he had no problem at all because he had enough wealth. He started investing the money and he had a part-time job also. He is able to maintain it. He had an employees. He was trying to earn money. So what is the lesson that we are going to learn from this? First, think like a fisherman. We need to calculate risk. If you're going to expect that, yes, it is enough for me, it is with the one day food, you're not going to build for your future, right? And the second one, you have to save more to increase the opportunities, because he had two fish in a day, but he has not wasted the time. He was thinking how I can multiply into three fish and how I can create a wealth. The third one we need to remember is we have to be consistent and we do not inflate the lifestyle. Though his income got increased, yeah, Sham was maintaining his expenses to his level. He has not increased his expenses. From 30K, he was just maintaining his expenses like it, and he was building his investments into the various investment avenue. It got it multiplied. So let us learn these three important lessons before taking into the investments, right? So now let us learn what is an investments. As I told, we need to earn the return for idle resources. As Ram and Sham's stories, we know that whatever money we have, 1 lakh, we need to take certain portion, we need to make an investments. So the investments should start getting returns. As you find, the Sham has invested on to his, he has purchased some hotel and he started earning out of money out of it. He made some investments. right? So here, same way, we need to earn the return for the idle resources. We should not keep it very idle. And we need to be having the specific goal in the life. So if you're taking an investments, I have in savings account, I have enough amount. What does a savings account return give? If you take SBI, that now it is moving, sir. Now it is investments. The slide is here, sir. Okay, okay. Just I'm putting from current slide. Is it visible, sir? Okay, okay. Okay, fine, sir. You can stop me in the middle, sir. If it is there is some disconnect or something, you can. Okay. So the second one that we say is like earning return for the idle resources. I'm putting my money in a savings account. What does a savings account yield me? It is around like 2.70. If you're going for some ICICI or HDFC Bank, you can see it is around 3 to 3.50. It gives it. So what we need to do? So some you can park it for an emergency purpose. Some you can fix it for your future uses, right? So you should be having some specific goal in life. Everybody has a goal. So like Ram and Sham, also you need to purchase some houses, or you need to build your investments. You want to multiply your investments for your children's educations or for the marriage. So you for spending your retirement life, you have a specific goals in your life, right? So the investments help you out, and there should be some provisions for future life. As I had told you, the investments that you make, certain portion of your income should be spent on the investments. You should make some provisions for your future life. The third one we calculate is about the inflation. So if you're going to buy the goods, suppose last month I have purchased for 1,000 rupees, and the same goods are going to cost me like 1,100. I need to remove some of the goods from my cart, right? Because the inflation has gone up, so you're going to sacrifice some of your goods. So in order to, you're going to purchase at the same price, you're going to purchase it, but you're going to remove some of the goods. So what is this cost of inflation is? And inflations, as you know, it is calculated on two. One we calculate on consumer price index, another we calculate it on wholesale price index. So here in consumer price index, we have 260 commodities coming under that. And in wholesale price index, you have 697 commodities coming under that. So we take in October 23, we had an inflation like 4.87%. Right now it is 5.55% in November we had. So to ease this inflation, so government, what they do, they cut the excise duty on petrol and diesel prices. They reduce the import duties on raw materials and edible oil. Then RBI is here. So what they do, they increase the repo rate and they increase the interest rates on loans and the deposit rates. So here we need to categorize ourselves how we are going to meet our inflation if the cost is going to go up. Suppose a savings bank is going to give me 3.5 and the cost of inflation is going to be around 6. Where does your cost meet? Right? So it doesn't meet. So you have to take care of your investments. So we need to categorize our investments. How? Which are the short-term goals? Which are the long-term goals? We need to categorize on ourselves, and we need to plan our investments and the choice of investment alternativeness which are available right now. So the golden rules let us follow. We have to start investing earlier and make our investments. We need to plan regularly, and we have to look in for not for a short terms, and we need to look for a long-term returns in the markets. So why we need to take India, right? So we need to know that India rising growth rate is 17.8% in, we are aiming in for 2024, which is the fastest growing rate in Asia, right? So the interesting figures why we need to invest in India is, one is when we take of the demographic dividend, you can find. So most of the people are under the age of 29 years. We need, this is the biggest strength that we have it, because most of the median age are falling under this category, which is very lower than China, because more working age group are there. Then, second one, when you take on the rising consumption, when we take the household spending is getting increased from 24% to 20% on discretionary spending we are going to make, and it is 15% when you take from the compared to 2030 we can expect of it. And digital India, the major boom in the on the internet services, from 450 million we are expecting 900 million internet users. And financial inclusion part, we take all the accounts are linked to the Aadhaar, right? So think about the debit card users. What we have increased from 30 crores to 90 crores, and 5x multiples, and it has transformed to 10x multiples it transformed. And urbanization, 100 plus smart cities are there, and every 30 people are moving every minute to the urban areas they are moving in. And the mobility from the lower class to class category. And the startups, it is about 1 lakh plus, and plus startups, 105 unicorns currently are there. See, such a big opportunities are there in front of us. Now you would have got an idea which are the sectors I need to keep on moving in, based on digital India, based on the financial inclusions, based on the infrastructure, what is the demand that we have, capital goods, because most of them are moving to the middle class, and how is the discretionary. So all these things makes India very interesting part for the investments avenue. And we see more CGR like around 17.8% we expect in 2021. So they follow the various business model. If you take inter-country migrations from China to India, you can find a lot of migrations are being happening on IT, pharma, and chemical sectors. You can find so many people are focusing to India. And inter-industry migrations, in-house manufacturing to the contract manufacturing we have moved, and intercompany migrations we can take from public sector to private sector, and value migrations are happening in terms of technology, in terms of cost of capital, lower switching costs, convenience, the innovation that we make, easier access to funding. This creates a very great opportunity for India, and it attracts most of the foreign direct investments are being attracted in India, right? So, which country that we invest, we want to invest only in India, right? Which is because we have a very huge growth opportunities are there. Then next, let us do in which assets I need to do invest. So everybody knows like financial assets are there, real assets are there. So these are the two categories that we have. So in financial assets, when we currencies, so these assets are an intangible one. Coming to the real estate, you have real assets, you have real estate, equipments, commodities, you have the other categories also. So these are tangible. You're able to feel it, right? So these are the tangible assets. So based on changes in value, you can find the intangible assets. When you take securities, you can find the price fluctuations are very more. Yeah. Whereas when you take real estate, equipments, or commodities, you have the depreciation, and it is an absolute technologies. Liquidity. When we come to the third factor on liquidity, when you say what is the difference between financial asset and real estate, liquidity is very high. If you want to buy or sell a security, you sell it immediately. So you'll get it, you just get the money in hand at very quick manner. Whereas in real estate, real assets, when you need to find a broker and you need to manage them. It would take time for you to get your money back, right? So the liquidity is very less, and additional cost is not there. There are so many regulatories are there, and everything are screen based. You can get, now it is going on T+0 settlement. You get it, your payment on the same day you get it. Whereas when you go for real estate or equipment or commodities, here you have to keep on maintaining it. You have to pay an additional cost of being involved in it. and the purchase value is very low in financial assets, whereas when you take in real estate, real assets, it's a very high. So the equity securities, when you said you are going to be the owner in a company, right? So you're going to be the shareholder. Whereas in when you take on the debt securities, you are promised to repay your borrowed funds. Yeah, you're giving a money to the owner, and they need to give you the interest towards it. So those are classified as debt securities. And what is the difference between publicly traded and privately traded? Publicly traded, you can trade, you can find the securities on the exchanges, and you can trade through the security dealers. Private security, it is a closed fund and you cannot get traded, and it is a illiquid one. So derivatives, you time, it is value, you're deriving the value from an underlying assets. And you have financial derivatives, like these are the equities, equity index, debt index, other financial assets. Physical derivatives you can find, such as gold, oil, and wheat. So based on classifications of market, we can classify into based on trading of security and based on maturity we can find. So based on trading, you can classify into the primary market, secondary market you can find, and based on maturity, that is, I want to invest only for a year time. Then I want a liquid cash. So I'm having a commitment for next year. I need to pay my college fees or something like that. We find it the maturity within 1 year I plan to invest. Some I need to find something for my retirement. I have planned it, but it is for a longer durations. So you have a different maturities, right? So if you're going to find that I want to invest only within a year, you go for a money market. If you're planning in for a greater period, you go for debt and equity securities are there, where you at a specific maturity periods are there, you go and invest. But where do I find the security and how it is traded? You can go in for a primary market where the securities are issued freshly. In secondary market, subsequent to the newly issued security, it will be listed on the exchange. You can find the listing on the secondary market. Yeah. So the securities, now we classify fixed income securities and equity securities. So as I told you, if you are looking for a very, very short term period, so I want to invest my money, but I'm looking for only 1 to 2 year period. Then what are the securities that I can invest? So when you take into the fixed income securities, so you can invest on the T-bills. So you can wait for a period for 1 year, you can redeem it. There will be very, very low risk onto it. You're going into the intermediate term. If you're going and invest, you can invest onto the notes, which is for a very short term period and long term period. It could be like 3 to 10 year period if you're looking in. So you can invest onto the notes. If you're looking for a very long term, then you can invest onto the corporate bonds, which gives you like a longer maturity period, and higher would be the interest rates onto it. So you can classify if you're looking for a regular income, which you are planning in for your retirement, and you have a lump sum amount and you want a regular income, then you can go in for a fixed income securities. Yes, but I'm planning in for my retirement. I don't want to say when you're in 30s, you're planning in, but you want to invest for certain portion on equity and certain portion on fixed income, you can do it. Now, in equity, there are 3 classifications of equity shares you have. One is on a common stock, preference stocks, and you have warrants. So what is a common stock? Yeah, as I told, you're the owner, you have the ownership of the in the company. So you are holding a shareholders where you will be getting the dividends. So the dividends, we can see that even because the company board decides whether I need to give the dividends or I can retain the earnings, right? So it is decided by the board of directors whether the equity shareholders has a residual claim in it. So how much amount they can provide. So that comes under the variable dividends. So in case of the liquidity, I want to sell my shares. Yes, you can sell it and you can get your payment. So the liquidity is very higher in the common stock. Then comes in the preferred stock, where you have like second preference in case of liquidity and dividend payment. We'll go with the detailed in the next slides. Similar to this options, like we have warrants, after a certain period, it would be converted to an equity. Suppose you need to hold the stock for 10 years. After 10 years, it will be converted to the equity. So these are the options that are available for you to make your investments. Next, we'll go into it based on the options, based on the investor who needs to take it, their risk profile, their liquidity, how much tenure they need to have, and what is the risk reward ratio. As I told in the fisherman story, how much risk you can take today, okay, in order to get the returns on your futures. So the first one, you take it on direct equity stocks. Here you can find the liquidities are very higher and you can make your profits very high, and you should be a high risk taker. Then you can go and invest to the direct equity stocks.
Ma'am,
So
slides are not moving.
okay, 1 minute, sir.
I mean, the first page is there still.
So now you're able to see, sir?
Now we are on the page investment options.
Yes, sir. Okay. Is the screen visible, right, sir? I can just play like this.
Yes, madam, it's visible, but you are on the page investment option.
Okay.
The heading.
So 1 minute, sir. I'll move to the next slide. Whether you're able to see, just tell me. Is
Yes,
it moving,
madam.
sir?
Now, yes, it's moving. You are on the page pooled investment vehicles.
Okay, fine, sir. So I'll play like this. Okay, sir. So here we take on to the risk factor we take, and how is the liquidity and the tenure. If you're looking for a direct investment and equity, you have to wait for a very long term. As I told you, if you're looking for a very short term investments, then you need to go for a fixed income securities. That is, where you're looking for a very short term, you can go in for a money market instruments. Yeah, but when you're going for an equity, you need to wait for a very long time, and the reward what you're going to get is very high onto the investments. So if you don't want to make a direct equity investments, you have the next option called the mutual funds. So the mutual funds is where many people will be investing. They pool the money and the fund manager would invest based on your investment objective and your risk profile. The fund manager will invest and give you your returns. So this is going to be, again, as I told you, on equity, it is looking for a very long term. This is also a very long term investments, and compared to equity, because you're going to select your stocks, but here the fund manager is going to select the stock on behalf of you. So the risk level is going to be very moderate over here, and the liquidity is also, again, the liquidation is very high in this compared to these stocks also, and long-term investments risk reward ratio is also very high. Coming to the debt mutual funds, if you're looking for a regular income that you're looking at, which has a very less risk than compared to these stocks, moderate one, and you can also hold it for like a period of 1 day to 7 year periods. There are different varieties are there, and the risk profile, the reward what you're going to get is moderate compared to the equity stocks. And PPF, most of you all knowing it, it has a very long period and the risk is very low out of it. Fixed deposits, I need not say, many people are doing this fixed deposit. If you're going to have a lump sum investments, you need to wait for certain period. So the risk level is very, very low, and the maturity, it takes from 7 days to 10 years. And if you want to withdraw in the middle, you have to pay some penalties and you can withdraw it. So here the risk reward ratio is a moderate one. Real estate, you have to wait for a very longer period for getting it appreciated, and it is a very long term investment. Got changes. The next one, we go for the gold. It is a best portfolio for hedging against your inflations, and the risk is very low, and the liquidity is also very high. And if you're looking very for a long term, you can invest onto it, and the risk reward ratio is also very high onto this. So these are the investments avenues where you can take based on your portfolio. You can manage your investments, whether you want to have direct equity or you want to depend on the fund manage your portfolio, or you want to invest onto the fixed income securities or the government securities, or is a fixed deposit, real estate, and gold, or you can have a portfolio diversification with these areas. So As I told, there is a pooled investment vehicles are there. Mutual funds, I told, investor can purchase a strength from the fund itself through an open-ended. There are two types over here. One we call as an open-ended funds. The other one we call it as a closed-ended funds. So open-ended, you can enter at any time and you can exit. Closed-ended, so there will be a specific period. Only at that periods you will be able to exit from the funds. So it is available for you. There are many mutual funds based on your financial goals, based on your the expected returns and your liquidity period. You can invest onto these mutual funds. The fund managers, you can see their profile, their track record, how it is. Based on it, you can invest onto the mutual funds. And you want to invest onto the exchange traded funds. It mostly works like closed-ended funds. It works, and these are getting traded on the market, but you need to have a depository accounts for it. The other class, which is booming right now, we call it as an asset-backed securities. So if you are purchasing a loan, right? So these mortgages are pooled in one place, and the claim is made on that. So we call it as an asset-backed securities. The last one, it goes to the hedge funds. Here you will be having like limited partners, general partners. Suppose you want to have a very bulk investments, if you're looking on and a very long and longer periods you would like to wait for it, then you can depend on your hedge funds for getting it. But these people will be investing on the long and short portions. They will be investing on derivatives, and they will be investing onto the illiquid assets also. So these are the investment pool vehicles we have. The other category that you can focus on is to the currency. The currencies are backed by, as you know, the central government bank, they do it. Central bank, they do it. The currencies are held by the government and central banks worldwide. Suppose I want to do the transactions with dollars. So you can do it with US dollars versus Indian rupee, or euro, you can do Japanese, you can do British pound, sterling, you can do like Japanese in sterling versus dollar, dollar versus Japanese in. So these currencies are available in the market where you can do the trading also. So currency pairs for forex trading also is taken care in this market. So next comes the other category of investments. We have seen the equity. The other parts, it comes in a contract. So there are various types of contracts are there. One is on is my slide visible, sir?
Yes, madam. Yes.
Okay, sir.
Yes, ma'am.
So the other one we have in contracts. We have the contracts. We can say like it is classified into forward contracts, future contracts, option contracts, swap contracts, and insurance contracts. So when we take in forward contracts, I want to buy a wheat for 60 days, right? So I can just go to the forward contract to a bank. We can make an agreement, or at a future date, I'll be making a payment. But I'm just making a contract today saying that at a future day, I buy it. Okay. So this is a one-to-one person it handles. So it is called as a forward contract. Similar to the forward contracts, which is traded on exchange, you can do it. That comes under the future contracts you can do. And I want to hedge my risk, right? So what are the types we have? We have like a call option. We have a call as a put option we have. So instead of paying the premium in the future market, I can pay only the option premium alone I can pay. And I have the right to buy in the call options. And in the short call, I have the obligations to sell. In a put option, I have the right to sell. In a short put, it is an obligation to buy. So if you expect that the wheat is going to go at a future, it is going to go at a very high price. So I buy an option today, call option I buy. So in the future, I can just do the transactions by pay premium and buy it. Okay. So that is called as a call and pull. If you're doing it on opposite side, it is called as a put option we have. Then swap contracts. We have a currency swap and we have an equity swap we have. So agreements to exchange a series of payments on a periodic settlement period dates. So you take a loan in one currency and you repay another, you can do a currency swap. So you take on equity index and you pay the interest payments on debt, you can do the equity swap you have. And next contract you have called as an insurance contract. So you would take life insurance or credit default swaps are there. So where the third party provides an insurance to your contracts, it comes under the insurance contracts. So these are the various contracts which are available, and you can do with the financial instruments, you can do the transactions with this. Then the next interesting part, everybody are to the gold, crude oils, everything are getting metals are getting traded, right? So these falls under the commodity category. You can trade either in the spot market or in a forward market or in the future market you can trade. So all the precious metals, industry metals, you're likely that steel prices are going up, you can do on industry metals, you can do, and agri products are there. Suppose you find the cotton prices are going to move up, or coffee prices are going to move, or rice prices, you find there is an increase, you can buy the contract today. So you can enter into the agri products and do it. Energy products are there, and credits for carbon reductions. As you know, we are going for the green energy, right? So you can buy the credits for the carbon reduction. So these are the commodity markets which are available in the exchange. You can very well trade in the market. The other interesting facts you can see on the real estates. Real assets, when we talk about, is like only when we include real estate, equipment, machinery. It is not like that. Suppose you have a building and you want to make an investment. Yes, you can make. So it could be an agricultural land, or it could be a building, or it could be a machinery. You can invest onto the real assets. You can invest. Often it provides like income, tax advantage, and it also provides your diversification benefits. Yeah, so we have these classifications of investments we have. You can look into it. But who are going to do these transactions for me? So you have a financial intermediaries. Those people are going to do these services for you. So you have brokers. Yeah, brokers will be finding you the right buying and sellers. They will be helping you out. And exchanges are there to regulate the financial systems are there. There are so many regulatories bodies are there. They would be taking care of. And you have a screen based, so you need not go to each and every page to buy the buying and seller. So the brokers are there to help you out to find the correct match. They will help you out for the transactions. It is like, and dealers, they match the buyer and sellers for the same securities at different points in time. You have arbitrages, people are there who connect the same security. If it is getting in different venues it's operating, they help you out to connect for the price differential. They make use, you can make use of the arbitrage. Securities and depository institutions are there, where your securities are in a safeguarded, and you get your interest from those peoples, right? So you need to have some people to safeguard your securities. So there are securities and depository institutions who are there to take care of it. And insurance company, as I told, we have seen in the contracts, you have insurance companies who can manage your risk, and clearing houses for your payment and for your risk mitigations. They are there to help you out. The block brokers, if you want to do bulk trading, so there are block brokers you can place for your large traders are there, right? So these are the various financial intermediaries and services are available in the market. You can make utilize it of. So what are the positions an investor can take? So when you want to do a transaction in equities or in a future or in an options, you can do, you can take in long position. We call it as a short positions. So the long position, it represents, I want to take today and I want to sell it on a future date. Suppose your stock is selling at 1,000 rupees. You think that it is going to, the market value is going to increase and it's going to go up. The share price is going to be like 1,500. You can buy today and sell it in the future, right? So we call them as a long positions. This you can do it in equity, and you can do it in future. You can do it in a or option, call option we call. When coming to the short positions, you want to sell the shares immediately and you want to purchase it at a later date. So what you do is you take a short positions in the call. So you can do it in future and you can do it in a put options. You can do it in call or put options, right? So these are the two that you will be doing the transactions regularly. And leverage, when you want to have find an investor for buying and security, borrowing from a broker, and you want to, on a margin basis, you will be selling it, right? So you can do this leverage position also. It depends on the brokers you can do. So how do I execute order? First, there should be like bid and ask rate will be given on the display. So when you, so the bid price here, we talks about the price at which the dealer buys a security, and ask price is it at which dealer sells a security. So So these bits will be given displayed in the screen. You can find out. So once it is done, so those who trades with them at the posted prices, then they take the market. So this way, those traders who post the bids and offers are set to the make the market. So here, when the price is asking the bid at 49 and this is asking price is 51, when this price matches, the trade takes place, right? So the trading you can find out like market order or limit order. It instructs the brokers to execute the trade immediately. I want at this price, today's price, I need it. So you execute it. Limit order, you put a limit for the transactions. At this price, I need to sell it. So you go with your limit orders. So here we call as a day order. They expire if unfilled by the end of the day. You have given it, the trade transaction will be finding if you're going in the day order. Good will cancel till they last are fulfilled. Immediate or cancel. You can cancel unless they are fulfilled. Suppose you are making 100 shares, only 50 are taken up and remaining 50, so it get cancelled out. Good on close till the end of the trading day. It waited and you have stop loss. Suppose the prices is falling below the current price and or it will be executed on a downside. So you can have a stop loss. So I want to purchase at 30. So you can have a stop loss order also you can find. So for selling order, you can have a stop loss and buying order also you can find. This will limit your risk. Yeah. So you can use these validity instructions you can use. So you can minimize the risk and you can find your best price in the market. You can do that. These are the orders which are available in the market. You have it. Right. So I want to prevent a loss. Suppose I am expecting the price to go up, but suddenly the price is going to fall to 60 or 70 in a downside. So what I do a stop loss sent order because it does not fall below 60 or 70. I put a stop loss for 80. So once it touches this 80, it gets triggered, right? So I can minimize my losses. Similarly, stop loss buy order, we expect the price to going up. So what I do at 45, I make my purchases. I do instead of 30, I make it a purchase at 45 because the prices are going up. I need to buy it. I put the stop loss buy order in this. So after these transactions are made, so what will happen? It goes to the clearinghouse and the transactions are getting clear and you require the payment, right? Both the buying and sellers, it has to match and the payment has to get received. So there should be some mediator to do this transaction. So we go to the clearinghouse. So the settlement of transactions now it has been proposed for and settlement will be happening on the same day. So for retailers, it will settled by the brokers. Other, if it is going to be an institutional, the custodian or the bankers would be taking care of the instructions. So here, how do I buy the security? So you go to the primary market. For the newly issued securities, you go and buy. And after the securities are getting listed, you go and buy for the secondary market you do. So when you're going for the first time, you call it as an initial public offer. If the securities is offered second time, we call it as a follow-on public offer, we find it. So the process which are followed is like book building offers. We follow like it is a process of gathering indication of interest, like how many people are bidding. Based on it, we bid it at a higher price that is being fixed, and the shares will be offered based on how many people are subscribing it. If it is oversubscribed, it will be decided by the board how much shares that we need to distribute among the shareholders who has applied for it, and it indicates the opening price of these stocks would be better if it is a oversubscription. If it is an undersubscribed, the underwriters would be taking care of the issue. So these are the things a few we need to know about it while applying for an IPOs. Okay. So coming to the common shares, what are the things that we have? So common shares, you have the rights to vote you have, and you have an option to able whether you can exit or enter. You have the callable and puttable options are available over there. You have the statutory voting rights and cumulative voting rights are there. For the shareholders. So if you want looking for a capital appreciations and a variable dividend, and it is going to determine your profitability, then you can invest onto the common shares. Preference shares, it's same like as I told, it's on a common stock, it is based, and there is no maturity. It have like call and put options like a common stock or debt have, but there is no voting rights of them. Fixed dividend, but there is no obligation to pay for them. So dividend is a function of their profitability is given to them, and second preference are given to them in case of liquidity and dividend payment. So here you have like cumulative and non-cumulative, and extra dividend there will be a participating and non-participating they will be giving based on the conversions. Also, preference shares can be converted to the common stocks in the future. So when we need to make an investments, so which are the sectors? Now we told how to enter into the markets and how to through whether to IPO or through the secondary market or from the fixed income security or to the capital market. So we are seeing to the lost so many avenues are available. But how to analyze the sector that we need to look into it? To analyze it, so we need to make study about an industry. I want to make an investment onto the company. Let me take like the present we see everybody focusing on green energy, right? So this is the best time to enter into the market and purchase a green energy stocks. Like, so now we need to see, yeah, green energy is very good. So how do I find? First, I see what is the market position of the company. Let me take Adani Green Energy, Reliance New Energy. So these are the toppers on the green energy market. If you take Adani Green Energy, you can find their return over the 3-year period is 345%. The Reliance Energy, New Energy, if you take it is about 145%. They have given the returns. So we have to see about their market positions, how it is, their operating efficiency. When you're analyzing on the industry risk, we have to see what is the size of industry in the green energy has in the overall the market, and how is the growth prospects in the for the few years, and how is the competitive scenario, how is the demand and supply scenarios they have, what technology is being adopted by this, what are the various government policies are which are supporting for this green energy, if they have any entry barrier, and we need to look on to that profitability and cycle, whether they are a cycle stocks. Yeah. So by focusing on these, we need to examine it whether this industry is going to perform very well. The second factor, when we look into it, the market risk, whether they have the company is having the ability to sell whatever they are going to produce it. Are they or in a highly competitive market? How is their pricing leadership? How is their potential? And the competition dynamics, how it is. And coming to the operational efficiency meeting, how is the cost structure, how they are managing their technology, the human resources, how is their capacity utilization, are they having the flexibility, are they introducing the new products, and how is their manufacturing process flexibility, the integration, what they do, and how is their R&D. So these are the various research that we need to undertake while looking onto the business risk portions and the financial portions. When we talk, how is their cash flow operations, how is their accounting quality, how is their auditor reports, how they are evaluating it, how they are presenting over their reports, how is their debt obligations are being handled, how is their future plans, and how they are maintaining their finance. So these are the financial risk we take. The management, yeah, we need to look on the competency, the integrity, what is the risk appetite, what is their track records they have, regulatory and technology issues, how they're going to manage, and what is the goals, philosophies, and strategies they are doing it. So when you're making this wide analysis, you will be knowing which sector that you need to invest, which company that you need to invest, and take up the stock. So let us look into it. One such sector which can give you an overview on is called the fast moving consumer goods. Why I stated the sector, which is the fourth largest sector in the Indian economy. You can find over here is 6.8 billion. You can see now we are expecting 615.87 billion in 2021. What a huge growth and opportunities are there in a fast moving sector. So when you are dividing the category into the products, what in FMCG comes, household and personal care, it contributes around 50%, healthcare of 31%, and food and beverages is 19%. We can segment it into two, one on the segment and one we can focus on in rural. So these are the contributions that we make. Yeah. So we can divide into like essential goods, non-discretionary. It is always evergreen. Like we keep on buying. We don't say no, right? We keep on buying grocery items. We never stop them. We keep on buying it. And other non-consumer essential goods are there, which comes under the FMCG, which is on a cyclic demand, which is on a premium products, and consumers, whenever they have their funds, they tend to buy more on this. It is based on the economy also. So the FMCGC is on our day-to-day life. We keep on using our household goods. So more than around 3 million people, and it serves 5% of the total factory employment is given by this sector. And we expect the growth rate to 9% by revenues in 2023 and 24. We are looking into, and the key drivers which are driving in are the government initiatives and policies about the employment and youth populations, as we've seen in the beginning. What are the new brands? And we can see the migrations from lower income to the middle income group, and the e-commerce platforms, and the discretionary spent by the Gen X and millions. What a huge opportunities are lying there in this FMCGC, right? So to analyze this, we must understand how the companies behave in this sector and what are the critical factors that we see. Like as I told, in management risk, operational risk, financial risk, we need to take care of all these factors and we need to analyze on it, right? So we look onto these stable goods and growth. So are these companies are able to withstand the inflation, right? So when inflations are going up, there will be increase in raw materials. The companies, example, when we take Lifebuoy, 125 grams when we take, the price it got increased from the quote to this period from 29 to 31. But still the people buy the Lifebuoy product. Why? Because they have already established their brands and the consumers are able to pay for it. Like let us take Pure soap. Also, the price gone up from 76 to 81. So detergent powders, and you take from 30 to 31, it has gone up in the HCl products when we take. So such a huge cost, the prices are able to make it because of the inflation. They have made their changes in their prices also. So we need to look how is their demand and how is the growth rate and what they are doing and how is the product mixture, what are the varieties that they operate. Because as we know, the consumer tastes are getting different and they are able to manufacture different varieties to different segment they need to target. So how they can target it? Example, when we take Sunfeast, they are onto the cookies, they are onto the creams. For so many products are there. So whether they are providing right product mix to the right peoples, are they delivering it? We need to do. As I told, HUL, Nestle, they are hiking up by 10 to 15, but they are able to sustain. Because of they are able to sustain it, their ROC and ROE, are return on equity, are very good on it. That's why we see they are trading at a very higher multiples, higher PE ratios are there in this sector. Next one, we look into it, the low capacity, low capital intensity when we take. Are they able to manufacture the new products? Are they able to produce it with the existing manufacturing capacity, right? So are they outsourcing it? How they are able to maintain their logistics and how they are able to transfer the finished goods? How the logistics is controlled, right? And how their working capital is maintained? Are their debts are getting increased? All these things we need to take care of it. And fragrance and intense competition, how much they're spending on their revenues, how much, like when we take 12 to 15% are being spent on their advertisement and marketing expenses are being spent. So which segment are they targeting of, right? So these are the various things we take. When we look into these figures, we can understand out of all this thing, BSE, Sensex, Nifty, even in COVID period, you can find the FMCGC has not fallen so much. Even during the global financial crisis also, you can find the minimum fall you have seen is on the FMCGC. So these are the study that you need to make before entering into the sector, which sector you need to make it on it. The other factor we need to look in it while making the investments on to this inflation. So when we talk about the inflation, so we need to take few points. How was the inflation, right? Right? Because of inflation, the prices would move up. sir, whether my voice is audible, sir?
Yes, madam. Yes. Yes. Yes.
Okay, okay, fine, sir. So we need to take care of the inflation. We need to take care of crude oil prices because as the crude oil prices increases, it will reflect because the edible oils, the byproducts are taken by it, and the company products, how the diversification is there, the profitability of the company, how they are maintaining it, how the return on capital being employed, how their sales is there, inventory turnover ratio, how much inventory they are able to convert it into sales. We need to do like we need to take like price to book value and price to earnings ratios we need to take care, and dividend yields whether they are able to give consistent and stable dividends are being given. So here we need to look into all these factors, then we need to go on to the which sectors are really doing well. So when we take it of the company's stocks, we can find ITC, HCL, you can find out how is their net profit and how is their return on capital employed and operating profits. So these figures gives an highlight to us which companies that we need to invest. So you can find ITC, HCL, Godrej Consumers are doing really well on the FMCG stock sectors. Then in terms of dividend, because we expect a stable and consistent dividend, right? So you can find Bajaj Consumer, if the people is looking in for a regular income, right? They expect dividend from the company. So they can look in for the companies like Bajaj Consumer Care, which is on topping 800. Dividend yield is about 4.9% and dividend payout is 67.6%. So by looking onto the stock FMCG companies, they can invest onto these stocks, right? So the other factor, as I told, the debt to equity ratio should be very low level. So you can find HCL, these are having the debt to equity ratio almost zero, almost nil. So we can find the PE ratios of 40.9 and return on equity 62.6. It is absolutely zero. And sales is about 4.6% and profit on CGR is 11.6%. So you can focus onto these sectors for making your investment by taking the PE, what is the return on ratio, debt equity ratio, and how they are making their sales, and how is their profitability level, and about the CGR. So some of the companies that we find a very good earnings for investments are like you can find Tata, LXC, SRF. You can find how their ratios are from 2013 to 22. You can find a very good comparison how they have multiplied their profits. That is given over here. So you can make your strong investments onto these stocks. SRF, Bajaj Finance, Astral, PI Industry, and Ratnamani Metals. So the trending sectors you can shift or like to the economy, and you're finding on technology, consumer behavior. You can find out, and the other one, as I told, environmental concerns related. You have a very good opportunity for electric vehicles. When you go for digitalization, you can find about food delivery and e-commerce lines. You can find out OTT platforms who are the players in the business. There is going to be a very big boom are happening for your future. You can make all your investments. Always you can find there is a portfolio diversification. As I told, you can make your investment onto the gold, commodities, large cap, mid cap, because every time you can find each sectors are performing well. The history shows that it is a cyclic one. Sometime the gold will be very good, and sometime you can find the equity returns are very good. So if you are able to diversify your investment, you can have a very awesome returns in your future. Okay. So that's all from my side. Thanks for patient listening on the late night. Thank you, everyone. Now it is on to you for any questions, sir.
Thank you so much, madam, for the wonderful presentation. Now I request dear participants, please come forward to discuss with Honorable Subhashini ma'am. Dear participants.
Hello.
Hello. Hi, sir.
Good evening, madam.
Yes.
Yeah, good evening. Good evening, sir.
I'm audible?
Yes, sir.
Yes, sir. Yes,
Madam,
yes.
it was very elaborative and a very, comprehensive, presentation. And
Okay, thank you
my
so
question
much.
is simple that for people like, us, salaried person, where should they
Mhm.
invest to minimize the risk?
Salaried person, you can look in for like going for a mutual funds because you will not be able to monitor the equity. Because for equity, as I told, you have to make a lot of study. How is the industry is being doing it? How is the particular company is being doing it? So you have to make a lot of research. If you could find time in doing your research by doing an analysis of fundamental and technical analysis, if you are able to make out, you can very well invest onto the equity. Otherwise, you can go and opt for any mutual funds based on your investment funds. There are a lot of funds are available like quant small cap funds, mid cap funds are there, HDFC mid and small cap are there. And if you're looking for a large cap, you have ICICI, they have a very good funds are there. You can invest onto these various funds, so they can help you out a lot. And they have a very good returns like equity. I hope I answered your question, sir.
Hello, good evening, Dr. Bedkar sir, Principal sir, Prashant sir. Good evening, ma'am. Thank you very much for your wonderful presentation. I'm very newcomer in this stocks and other things. I'm taking help of my friends. My question
Okay.
is very simple. My question is very simple. Whether we should learn or we should I should ask my friend only to play with this. What do you think about this, ma'am?
So it is better that we take care of our own investments than depending on others, because whatever the risk, because your profile, he need not understand, right? You can get his advice and you can play on your own field.
Okay, ma'am. As a beginner, what you can suggest to me?
As a beginner, I would like to suggest if you're, I'm not sure about your age, like based on your age and based on your risk profile. So you can start investing on, if you're like in the bid of like for 30 to 40s are there, where you can invest like portions of 70% onto the equity and 30% onto the debt, and 70% you can divide it on to the direct equity also, you can try it, and on, as I told to the other sir, like you can invest onto the mutual funds also, sir. You can do it on a regular. If you plan to invest that I want to invest 10,000 today, you just plan it that every month, like you get your salary on every 10th of the month, I would be spending like the 10,000 rupees I'll be purchasing an equity or into the mutual funds. You have this disciplined way of investing, surely you will be getting a very good return. I can state you an example. I thought of sharing it over here. A person who has invested in Wipro. I heard many people would have heard of these stories. Reliance Industries, Wipro, or Tata. Just a 10,000 rupees in 1980s. Who has done it? What do you think right now his worth would be, sir?
Around 10 lakhs.
10 lakhs. You cannot imagine. It is 560 crores.
God, my God.
Such an wonderful opportunities are there, but many people are not aware. Just go and buy Wipro, just buy a Reliance, just one share or two shares, according to your investment objectives, according how much you are able to invest. Just start buying right now. Yeah. Every month, just I'll plan to buy one share or two shares. That will
Yes,
be
ma'am.
very good investments. To blue chip companies, you can make your investments.
Thank you, ma'am.
But one should have a lot of patience in this. Once you invest money, you have to wait for a long time. You cannot expect things to be
Yeah.
done in a short time. That's big.
Yeah, definitely, sir. Definitely. Thank you for your experts' opinion, sir. Thank you. You are in the from the same field. Yeah, thank you.
Despite the fact that this is a very danger field, it is as a academician, we will fail in this practical field, sir. To be very frankly.
Yes. Thank you, sir. Thank you very much for giving me this opportunity to be a part of the World Recorded Series, sir. Thanks a lot, sir. I wish you all the best. Thank you.
Thank you, madam. Thank you, Bedkar sir.
Thank you, sir. Thank you. Thank you, sir. Thank you.
थैंक यू मैम। आपने एक सच में एक महत्वपूर्ण जानकारी साझा की मैम, और आपने जो बताया सचमुच में सुभाषिनी मैम बहुत ही अच्छा लगा मुझे। और मुझे एक नई जानकारी मिली जो स्टॉक मार्केटिंग के बारे में मैं कुछ भी जानता नहीं था, अनभिज्ञ था उससे, और आपने सचमुच में एक नई जानकारी साझा की मैम, इसके लिए बहुत बहुत धन्यवाद। क्योंकि आपने मैं तो बिहार प्रांत से हूँ, मैं पटना बिहार से जुड़ा हुआ था, और मुझे अच्छा लगा मैम आपके बीच में आकर के और जुड़ने का अवसर मिला। अम्बेडकर सर का ये प्रत्येक दिन का यज्ञ है सर का, सवेरे भी 6:30 बजे भी एक सेशन था, इसके बाद आपका सेशन लगातार 9 बजे रात्रि का हुआ, और इस बीच में अच्छा लगा कि 1 घंटे का सेशन में बहुत कुछ आपसे सुभाषिनी मैम जानने को भी मिला। और मुझे मौका पता, मैं समझूंगा कि सर से कभी आपको और भी जोड़ेंगे तो और भी मुझे आगे नई चीजों की भी जानकारी मिलेगी। क्योंकि मैं जिस जगह से हूँ मैम, मुझे नहीं पता आपसे मुलाकात होगी या नहीं, क्योंकि अभी तक तो मैं बेदकर सर से भी मैं नहीं मिल पाया हूँ। मगर एक आभासी दुनिया ने हम लोग को इस तरह से बांध रखा है कोरोना काल के बाद कि 1 घंटे का भी सेशन होता है तो बहुत सी बातें सामने आती है, बहुत कुछ जानने को भी मिल जाता है, बहुत सारे पॉइंट्स भी मिल जाते हैं। तो इसके लिए बहुत बहुत सुभाषिनी मैम धन्यवाद। और सबसे बड़ा धन्यवाद है कोरोना काल को जो इस तरह का प्लेटफॉर्म हम लोग को उपलब्ध करवाया। जो आप कोयम्बटूर से आप जुड़ी हुई हैं, मैं कहाँ पटना से जुड़ा हुआ हूँ, तो ये बहुत बड़ी बात है हमारे लिए कि मैं आप लोग के बीच आकर के ये जुड़ता हूँ प्रत्येक दिन में। तो और बेदकर सर को मुख्य रूप से मैं धन्यवाद भी देता रहता हूँ। धन्यवाद मैम।
धन्यवाद, धन्यवाद सर, धन्यवाद। Thank you, sir. Thank you.
Thank you, ma'am.
Thank you very much. Okay, sir. Okay, sir. Thank you, sir.